Good morning, good evening, good night. We're watching this transmission. It is I, Mike Martins. I got a kind of somewhat of a very important article that was sent to me last night from one of our viewers. ANZ and Westpac credit ratings outlook downgraded to negative, says Fitch. So now here's the deal. To the average Joe walking down the street, the average day-to-dayer, the average junkie on a cell phone, just can't get off a cell phone junkies. They don't really care about this. This means diddly squat to them. But in the long run, it should, in the grand scheme of things, it means a lot. It doesn't hit banking confidence, right? Consumers in banking confidence in banking is already at an all-time low anyway. In Australia, after the, in Germany, everywhere, Canada. Well, especially in Australia after the Royal Commission started picking around and started finding all kinds of crap. But ANZ and Westpac credit ratings outlook downgraded to negative. So how does this affect? Who gets affected? The investors. The men and women that gain that equity. The equity they get paid on monthly or quarterly basis that gain equity. I'm a stock equity investor myself. I like to just to buy back stocks when I get my equity payments. I just like to grow my position in companies. But I don't hold any stock in bank. I refuse to hold any stock in bank. Even at 4.5%, 5, even 6% dividends offered. I refuse to. Because the banking system is more frail than elephant walking on a spider web. Anyways. Australia's ANZ Bank has taken another hit with the International Credit Rating Agency. Fitch downgraded the bank's operation in both Australia and New Zealand from a stable to negative outlook. If I was governor of New Zealand, I would honestly be fully independent, one, from the UK, and two, governor generals and all that crap, and get rid of all that crap, and crown land and all that crap, and I would actually become fully independent from Australia and have a New Zealand banking system backed by gold, silver, or some sort of a system. I would actually create a system. New Zealand's taken the right steps forward with the whole banning foreign investors, and that's a good thing, because you go to a lot of those countries that they're coming from, you're not allowed to buy nothing. You're not even welcome there. So stable to negative outlook, citing material shortcomings in operational risk management which were not aligned with the assessment Fitch had previously incorporated into its ratings. Also receiving a Fitch outlook downgraded to negative. For the same reasons was fellow Australian Big Four trading bank Westpac alongside with its New Zealand operation. This resulted in a downward revision to our score for management and strategy and a negative outlook on earnings and profitability, along with the heightened assessment of the risks to the bank, and its management team fails to prevent the risks from the remediation of operational and compliance risk shortcomings from spilling over in spilling its ongoing business, Fitch and said of both banks. This is most likely to manifest in weakening earnings relative to peers, said Fitch in a statement 6 days after the Australian Prudential Regulation Authority required ANZ and Westpac to each carry $500 million. I carried. No, I read this article for you guys where the banks need some sort of liquidity because most banks don't have two nickels to rub together. Nobody has any more deposits. No one has any more bank in their reserves. Why? Because nobody has any savings anymore. Why? Because it's too damn expensive to live. Of additional operational risk capital on its balance sheet in response to the bank's self-assessment of governance, accountability, and culture. So here's the deal, guys. A lot of these banks didn't keep two nickels to rub together. Why? Because it's all derivatives, it's all IOUs, it's all a bunch of crap, and all this risk lending. The banks took this risk lending in the mentality or thought that the governments will just bail us out. Let's go ahead and roll the dice, and if we keep crapping out, who cares if we crap out when we roll the dice? Because you know why? The government's going to bail us out, so it's too big to fail, and we're too big to lose for the country's economy and government. So the banking system has put especially Australians, into these really risky positions where the working poor or the middle class still need to pay out these banks when they fail, right? All of Australia's big four banks have experienced substantial reputable damage, followed by the findings of the Royal Commission in Australia into the banking misconduct. I talked about that earlier. I've been covering that for ages. Fitch moved the downgrade to National Australia Bank owners, also of the Bank of New Zealand, to negative ratings outlook in February. So what's going to happen, guys? A lot of confidence in investors. You see, that's why Deutsche Bank is basically taking a punch in the gut. It's because investors are moving their positions out. A lot of investors moved out their positions when it was sitting at 30, 40 euros a stock. A lot of people got out at the right time, right? However, Fitch is not changing Westpac's ANZ's AA- credit rating for operations in Australia and New Zealand. The rating confirms reflection of Fitch's expectation that banks would maintain their strong company profile in short term. There's too much confidence lost. Too many investors are looking at this and saying, I'd rather invest in Kellogg's, or I'd rather put my money in oil or gold or even crypto. So everyone's kind of hedging away from the whole banks. Now, when the bank loses its partner, its investors that have been gaining these beautiful equities, and how are these banks getting, how are these lucrative investors getting these equities? From the day-to-day depositors. Your fees, your interest you're not gaining in your banks, all that the banks are making off you is going to their lucrative investors. And that's why it's set up in a way where back in the 80s and early 90s, everyone would jump on the bank saying, whoa, they're paying 5-6 points? I'm on there too. The average Joe could do it before. Now the average Joe doesn't have two nickels to rub together because he's got to put it on his credit card, right? Both outlooks may be revised to stable if the government of operational and compliance risk can be strengthened in line with regulatory expectations without a sustainable negative impact on ongoing business and earnings, Fitch said. ANZ's New Zealand subsidiary has had a string of bad news in recent weeks, beginning in May, where the Reserve Bank of New Zealand censored the bank for using an unapproved operational risk capital model since 2014. We already did a video on this this unapproved operational risk model, and what a bag of crap as it is. Followed by the departure of its local chief executive, David Hisco, over expense irregulations and the launch of this week's class action by victims of convicted Ponzi scheme operator David Ross, whose Ross Asset Management was banked by ANZ. ANZ's objection to releasing documents supplied to the Financial Markets Authority to the RAM claimants was the subject of a 3-year legal battle that was subject to a court suppression and orders until earlier this month. Meanwhile, ANZ has been leading the charge against proposals by the Reserve Bank of New Zealand to double the current minimum capital holding requirements of the New Zealand banks, and belief that the readjustment is required to ensure the country's financial system resilience. So remember, guys, we've been covering this step by step as we went along. This is a problem because you're losing consumer confidence, where people are just going to start pulling their money out of the banks because they don't want to deal with this crap. They'd rather have the two nickels to rub together in their fingers than having it in an account where it's getting eaten away by inflation, right? A lot of people now are hedging with gold, silver. Crypto is up right now. Gold is over 1430 right now, or 1426 right now. It's a 7-year or 8-year all-time high. And but if you want to take gold from its 7-year all-time high against inflation that we've already occurred over those 7 years, gold still has a long way to tick up to be in line with where things should be. Gold should be around $4,200 an ounce, and silver should be sitting around $280 to $350 an ounce. That's just my opinion. Now, what's going to happen with the IOUs? Now, let's talk about Deutsche Bank IOUs. Deutsche Bank IOUs are a big problem because if you go back to 2012, people want their gold. Now, if you go back to that, See, Germany has its gold. Germany has its gold back. Okay, wait. Biggest German. I'm looking for articles from 2012. Let's see if we can get German. If I can find what I'm talking about. But the articles from 2012. That's the problem. So, a lot of Germans are asking for German people, not the bank. The bank could go to hell. German people are asking for their gold, and they've been sent away. People want their gold back. Deutsche Bank, because everything's run off derivatives and IOUs, right? Yeah, there's nothing. It's not showing. It's not getting it. It's articles from 2012 where people basically were begging for their gold back, and the bank just flagged people away. This is from the other day. Deutsche Bank staff in London were seen leaving its offices with boxes to speak as HR, like being in a hospital in a waiting room with people rather than suing Deutsche Bank back together. Didn't the FTC, so let's see, equity, it's not giving us, they don't want people to know this because it's going to create fear in people. Where people want their gold back, here's my gold certificates, this is a big bank, this is the World Bank, here's my 3 certificates that I've purchased in the last 5 years. And the problem is those certificates, a lot of people bought gold at what it was on that day. So if people picked up gold at $800 an ounce, $950 an ounce, 10, 15 years ago, they got their certificate. The bank's not going to issue $1,400 an ounce gold to people. You see what I'm saying? The bank, especially Deutsche Bank, a lot of these banks, especially the ones in Australia too, they've done some really poor investing. And now they're risking it in speculation in the markets now, in the stock market. It's not looking good, guys. ANZ, Westpac, bad boys. Shame on you. But ripping off their own people and selling out their own people. And I wish the Royal Commission could dig a little deeper and go branch to branch and start auditing every single branch file in there. Auditing every single account that's up for renewal. I wish there was like a capacity where an auditor would go into every single location and go over every file. They'll start finding things like, wait a minute, this guy's pay stub or pay slip doesn't match the address on file we have for his job. Let's call his job. Oh, he hasn't worked there in 10 years? Oh. Then you start finding all kinds of stuff. You'll start seeing people pack them boxes faster than you could count to 3. Anyways, guys, let me know what you guys think. And if you want to support this transmission, guys, don't forget to hit me up on Patreon, or Patreon right here. Hit me up on Patreon, guys, for $1 a month gets me my coffee. I'm being honest, guys. Buys me my coffee. Thanks for watching. I look forward to reading your comments below. Big hug to everybody. And thanks for watching.